Hello, welcome to the Solid as a Stock session. Let me just make sure that I can see chats and things like that. Welcome to the stock session. Let me just put the disclaimer. There they are, top left hand side. So please read them, even if you have to pause the video to do that. Now, with this Solid as a Stock session, hopefully it's obvious what we're covering. We are going to go through some stocks. Now, we have different ways that we go through things in terms of different things that we cover is what I mean. So we'll go through the current market environment. We'll go through trades that we've already placed. Did they win? Did they lose? Did we cancel them? How would we have managed them? We'll manage any positions that we still have open, and then we will execute some new opportunities if we find them. If you are watching live, then please let me know in the chat box if there are any particular stocks or particular timeframes that you want me to look at. If you have any questions, let me know. If you're watching this recorded and you have any questions, then there are different ways you can go about it. You can email me, which is becky@tradewithufos.com. So you can email me with any questions. There's also support@tradewithufos.com. So you can use that as well to email for any questions. Or you can go to this link here, which if I just bring it up here, so it's tradewithufos.com/Becky, and it will bring you to this link. From this link, you can get different apps and platforms. If you scroll down, you can get one-on-one coaching here. If you scroll down a little bit further, you can log in for free and you can post questions here publicly. Now, we prefer that you do that because once it's posted there publicly, we can answer it there publicly, which means this kind of becomes like a frequently asked questions section. And people can come and find answers to questions by scrolling back and seeing the answer to the same question that somebody else asked a few weeks before. So ideally, you come here and you either find the answer to your question already, or you do somebody else that favor by posting that question on here. So hopefully that makes sense. So let's now go to, I think what makes sense to do first is we'll look at trades that we placed last time, and we will go through and see what happened and how we would have managed these trades. So first things first, this is Aerojet, AJRD. We placed this on the 21st of January. We had a weekly on the left, a 3-day on the right. So let's see the 3-day. And this is what happened. In fact, I tell you what, let's do it. I know it was a 3-day that we were looking at, but let's look at a 1-day just to see exactly which days things happened. So we placed this trade on the 21st of January, which was here. And it looks like it entered on that day as well. So it came up and it touched our entry on that day. Brilliant. Everything still lined up. We wouldn't have done anything with this trade. No cancelling, no nothing. It still worked perfectly. It then came down, and as we see, it gapped from here the next day, so that would have been the Monday, right the way down to here on that Tuesday. So what that means is we would have actually taken our first target as a profit here rather than here, which is great. That means we're actually slightly over break even right now. The worst thing that happens is price comes straight back against us, stops us out. That means we would have taken around about, I'd say, maybe $60 there and then lost 50, or the same ratio depending on what you're risking. So overall, we are open in this trade, nothing to do, nothing to manage. It will either come down and hit our second target, go up and hit our stop. We might close out somewhere in between, but we've got no reason to do that at the moment. So overall, at a slight profit with this trade, even if it were to come straight back against us, which is nice. So the next trade, ARCC, Airs Capital. Load this on both charts and make sure I've got the chat there. Okay, here we go. Sorry, just checking those. So this one, unfortunately, was a stop out. So we placed it again there on the 21st and it triggered us on the 21st, stopped us out there on the 24th before going further off in our favor. Shame that that happens sometimes, but it does happen. It's okay. We'll get over it and we will go and look at the next trade. So that was a losing trade there on that one. Now the next one was BGS. Like this. Okay, so this one was also an out-and-out loss. So we placed the trade on the 21st. It triggered us on the 24th. we still had every reason to be in the trade. We wouldn't have cancelled it. Everything still lined up, and it came straight there against us and hit our stop, stopped us out. Again, no problem. It happens. That would have been a losing trade. So far, 2 losing trades, 1 open trade at a profit. Then we had DOV, Dover Corporation. So similar thing here, we placed this trade on the 21st and it triggered on the 21st, which was here. Now, by the time we got stopped out, it was the 25th. So by that point, we would have already actually seen a change in climate. So what that means is we would have actually got out. So if we go back in time here and we'll check out exactly what happened, just so you can see how we, there we go, just so you can see how we would manage a trade in real time, show you what it would have looked like at the time. So we placed it on the 21st. On the 24th, which was the next day, we would have seen a red dot. Now this was a long trade. If I just squidge this down, this was a long trade where we were getting in at the black line and hopefully taking profit at the green line and above. So we only place long trades if we have blue dots, because the blue dots tell us probability up. This was a red dot that appeared on the 24th. So we now have something that's telling us our trade no longer has probability. So if we'd have been managing this trade properly, then we would have checked it on the 24th. Price opened around about here. So it would have been around about there that we would have cancelled the trade at a slight loss. So let's say this was risking $50. Maybe actually you ended up taking a loss of $25. If the big one was $100, that was 50. If the big one was $1,000, that was 500. So roughly you would have closed it out manually at a loss of about half of the original loss. So that was Dover. FMBI, First Midwest Bank. Yeah. So this one is a little bit messy, so I'm just going to replay it to make it make more sense. So we placed it on the 21st of January, which was back, it would have been, so that's 18, 19, 20, 21, lovely. I think that's right. Yep. Yeah, brilliant. So that's the day that we placed it. Everything lining up, looks good, comes in and triggers us the next day on the 24th, which was here. Now, we would have, if we'd have been watching this, we'd have noticed that the EMA price would have fallen outside of our entry by just a bit, but if you were watching it and you were waiting for it to come down and trigger, you might have closed this trade. Now, if you'd have closed this trade, then you would neither have won anything nor lost anything, nothing, right? Nothing would have happened because you would have cancelled the trade. If you left the trade on, because perhaps throughout the day, that EMA number, because it opened down here, right? So at the start of the day, the EMA would have been here or somewhere down here. So perhaps at the start of the day, this EMA number was very close to our entry. So perhaps at the start of the day when we triggered into this, we were still in the trade. Now, from there, oh, I'm on the wrong one. From there, the next day, price went straight up, hit our first target, and actually just missed our second target by 1 cent. The next day, it's come up again and then moved against us and then stopped us out. So overall, what happened there, if we were still in the trade, because at the start of the day, the EMA would have been lower, perhaps lining up with our entry, then we had a break-even trade. Price went off, hit our first target, just missed our second target and then stopped us out, break even. We made half the trade, we lost half the trade. Overall, break even. Or we cancelled the trade and therefore nothing happened anyway. So in either case, whether you left this on or whether you cancelled it, this would have been the same as not having taken the trade, right? A break even situation. So that was FMBI. So let's now look at the last one that we placed last time, FULT, Fulton Financial. This one is cancelled. Has not come back. We placed it on the 21st of January, which was here. It has since gone off, done its own thing. The EMA has risen, no longer lining up, so we cancel the trade. Easy one with that. Okay, so those are all the trades we put on last time, and I know for those of you that want to get straight into, hey, can we look at new trades? I get it. I'm just going to look at a few other trades that we've had open for a while that we've been tracking, just so we can see where those are at. For those of you that might have followed those, might still be in them, how to manage them. So this one has now finally hit our second target. So let's just close that on my list as well. So this was a final profit. We had two targets, finally hit both of them. So happy days. This would have been the 31st of January is when price went up, hit our second target. So we finally closed out this trade. We've been in it for a few weeks at a full profit. So that's lovely there. So that was CNP. Then we have HE, Hawaiian Electric. Where are we here? So with Hawaiian Electric, our target 2 was a trailing stop. So by the looks of it, I'm going to just go back here to see. No, it doesn't look like any, and we'll see them pop up. It doesn't look like any green UFOs would have appeared so far. So far, we've hit our first target. Our stop loss will be trailing behind green UFOs, which I think we must have had earlier on here, which is why our stop loss has moved. So our stop loss moved up last time. We've got no new green UFOs to trail it behind. So the worst thing that can happen now is it comes back and stops us out and we end up at a slight profit because we would have taken half of the trade and then lost a tenth of the trade. Or perhaps it continues to move up, new UFOs form and we trail behind it. So for the time being, still open with this one. And we have FOE, Ferro Corporation. Okay, similar situation here. We have a trailing stop loss, meaning we would be moving our this red line, our stop loss behind new UFOs. So far, it's hit our target 1. That was on the 2nd of February, so it's hit our target 1. So the worst thing that happens now, if it comes against us, is we break even. No reason to cancel it, no reason to close it out, and no green UFOs to trail behind. So at the time being, leave it as it is, but it's at a slight profit. POR, which is Portland. Where are we at with this? Let me click on here as well. Okay, so with POR, I wonder where we put our second target. Our second target's quite high up. For the time being, we've hit our first target. We would now be closing the trade as of the 7th of February. Let's just bring this back. Okay, yeah, so on the 7th of February, our climate changed. So again, if we're strict to the rules, our climate has changed, therefore we close the trade. We no longer have probability in our favour to the upside. So round about the 7th, which is when that changed, any point during the day, you might have closed it between this range. So you might have closed it at, I don't know, anywhere from, if we see that, anywhere between $52.75 to $51.78. So call it $52, right? As a nice round number. So you closed it out at a slight profit, meaning we took profit on our first target, we took profit on our second target, albeit sooner than where we'd originally put it. Overall, a profitable trade. Okay. Okay, and then we have one final trade to look at. Vonage, not really sure how you'd say that. So this one is done us a great favour. You see this big jump in the EMA there, that it's just kind of followed this gap, which is brilliant. So we placed this trade on the 29th of October, which was down here. It triggered us. Our stop was originally down here. We've now trailed it up. So the worst that happens with this trade, if it were to come all the way back against us from $20 something down to $16, it would have to drop that far and it would stop us out at a slight profit. That's the worst that happens. In between that, any change in climate, we would close out. Or if we have new UFOs that form, we would place our stop further behind it. So worst that happens is we make a profit in this trade. But so far, we would be holding it at a very decent profit so far. So I know we've just spent a good 15 minutes going through trades that we've already placed. I understand that for those of you that want to place new trade, that first bit's a little bit boring. For those of you that have followed us before, hopefully that helps you. If you have followed along and maybe you've placed trades like the ones we've placed and it helps you. And even so, even if you weren't with us on previous sessions and even if you didn't follow those, ideally you understand how to manage trades as well, not just how to place them. What happens once they're in? When do we cancel them? What would we do with our stops so that we figure out exactly what happens with our trades? Do we profit? Do we lose? Do we break even? And what are the circumstances that could change those things? Okay, so now that we're done with that, let's now go and look at some new trades that we can place. So let's come to, firstly, let's look at our economic calendar. I'm going to filter by US markets because we look at US stocks mainly. And I'm going to filter by high impact news. Why? Because I want to know the scheduled news reports that might be affecting us for the next week or so, so that we can understand perhaps what might be going on. So today, we've already had that news today. So on Wednesday, we've got some news coming out that might affect US markets. So be aware of that. Perhaps on Wednesday, come and have a look at your trades, see where they're at. You might close some of them, you might close parts of some of them, but just be aware of it. Depends on your risk profile as to what you do with that, but be aware of that. Okay, so new trades. We are going to go to top. We're looking at the ES here. So top is our platform. We're looking at the ES, which is the continuous futures contract for the S&P 500. If you haven't traded before and you don't know what I'm saying, essentially what we are looking at is a representation of the US stock market. That's what we're seeing. We look at this first. Why? Because if the US stock market as a whole is going up, then the stocks within it also tend to be going up. So it makes sense that we look for individual stocks that have probability up when we come to look at our scans and filtering out trades. It doesn't have to be that way. If the stock market as a whole is going up, but the individual stock that you're looking at itself has probability downwards, then follow that. That's more important. But having correlation, meaning the individual stock is doing the same thing as the rest of the stocks, helps. It adds a layer of probability. Doesn't have to be that way, but it does help. So I want to look at the ES first to give us direction as to which stocks we should be scanning for. Probability up or probability down. Now, I usually do swing trading or longer term trading with our stocks. Don't want to be in trades that could last a couple of days. I'd rather be in trades that last a little bit longer, just because the way the stock market works, obviously it does gap around a little bit. Don't want to be caught out by those gaps. I'd rather have wider zones, wider areas that give me a little bit of wiggle room there. So looking at the weekly chart of the S&P, we have a thick red dot on our auto climate. Those that don't know, auto climate gives us probabilities as to where that market, whatever market it is that we're looking at, is likely to go. If it's a thick red dot, tells us the probability is down. Notice I say probability, not guarantee. We never know 100% what's going to happen, but we like to be led by the probabilities. So if it's a thick red dot, probability down. If it's a thick blue dot, probability up. If it's a thin dot of either color, the probability is neither direction. So for the time being on the S&P 500, we always look at the latest one on the auto climate, thick red dot, probability down. That tells me we are going to scan for stocks that also have probability down. So we're looking for short opportunities today. If we run out of short opportunities to look for, then we'll look at long opportunities as well. So I'm going to come to my matrix so I can program in these scans. The only filters that I'm going to do, I'm going to go to earnings and I'm going to exclude stocks that have earnings coming out within the next 5 days. Earnings can, of course, massively impact a stock up or down, the way you think, the way you don't think, but they can impact a stock. And I don't want to be in trades where I have where I'm exposed to volatility so soon. So I'm going to exclude stocks that have earnings in the next 5 days, and I'm going to look at trades that have a weekly confirmed down climate that's sensible, meaning reasonably close to the start of that climate and near the 9 EMA, because that's one of the factors that we use to enter our trades. Then I'm going to click scan, and it's going to come up with a big list of all the trades that I could possibly take that fit that criteria. Now, I should have reworded that. It's not trades I could take, it's stocks that fit that criteria that we can then go and look at to see if there are available trades. So I'm just going to go alphabetically. I'm going to go, rather than A to Z, I'm going to go the other way around just for fun. We'll click on them one by one, and by doing that, we will find more than likely some trades that we can place. Now, what I'm going to do as well, and if you've joined me recently, you'll see that we do this. I'm going to cycle through 4 different time frames on the right-hand side. So as a quick summary here, especially for those that might be new to these sessions, we are looking at 2 different charts of the same market. We've got weekly on the left, and then we will look at 4 different time frames on the right. Why? Because the weekly is helping us figure out where we have probabilities. We have a thick red dot there, probability down. The weekly will also help us figure out where to find the opportunities on the right-hand side, but we'll come to that in a minute. So the left-hand side is pretty much to help us figure out which direction we go in. The right-hand side is to help us be more specific about where we do that. We don't just click sell in the middle of nowhere and just hope it goes down. If we do that, then we don't know where to manage our risk. We don't know where we would be right in terms of where we take out our profits. So we're going to use the right-hand side to help us figure out to be more specific. More specific simply means this time frame needs to be smaller than this time frame. If we go too small and we look at 2-minute charts, 10-minute charts, hourly charts, it's a little bit on the small side. It's not as relevant to what's going on in the weekly. If the weekly chart is moving down, then a 2-minute chart could be all over the place. It's relative. It's not that close to each other. So I'm going to move between 4 time frames that are relatively close with each other. I'm going to go from the 144 minute to the 3 day. So 144, 1 day, 2 day, 3 day. That's what I'm going to look through until we find an opportunity that lines up. And an opportunity that lines up, in this case, because we're going short, is a red UFO that coincides with the EMA price on the left-hand side. Red UFO on the right, coinciding with the EMA price on the left. So at the moment, we don't have anything that we can see. I'm just, like I said, I'm going to just filter through until we find them. So nothing there, nothing on the 1 day, nothing on the 2 day, and nothing on the 3 day. No, she lies. She lies, it's there. Okay, I spoke too soon. In which case, looks like we have an opportunity here. So the EMA is overlapping current price right now. Price right now is at the EMA. And we have a few of our UFOs showing us that we have some sell orders here. Where does that start? 35.92 to 39. Yeah, brilliant. So I was just checking that to see where we would have probabilities for room to move down. I'm just going to take out this. There you go, just so we can see more clearly. Okay, so this is our first trade. What I'm going to do is I'm just going to place this in my little spreadsheet, and then we'll take it over to TradingView to complete the trade. I do that because I think, one, TradingView is more user-friendly, I think, in terms of placing trades than a lot of other platforms. It also shows you, for those that are not using Top, if you're using different platforms, shows you a different platform that you might be using or might have free access to. As to how you can see these trades and place them, and it switches it up a bit. We can use the calculator and things like that. So we are looking at UBSI, 1 week, 3 day, going short. Our entry will be 35.92, which is the bottom of this UFO, gives us the price there. Our stop loss is going to be 39.90, which is this UFO plus 10 cents. Our target 1 we'll figure out in a minute. Our target 2 will be the top of this green UFO here on the left-hand side, which is 28.18. Why? Because we've got probability down on this time frame. Probability down means they're sellers. What's the only thing that can stop sellers? Lots of buyers. And for the time being, the closest stack of buyers are down here. So that's why we get out just as they begin. So those are our numbers. Let's now go to Trading View and we will place this trade. So this is UBSI. Just thinking for a minute there. UBSI. United Bank. Now I don't have UFOs on this chart because sometimes the data can be coming from a slightly different place and it shows us slightly different things, but we want to use the data from top, which by the way is coming from TradeStation. We're around about this price, aren't we? It's like current price. I just draw random lines. I use the Fib retracements, and I'm so sorry for those that use Fibonacci retracements in the way they were intended. I use them as a drawing tool, so I simply just draw them on the chart and then I can type over where I want them to be. Our target 2 was going to be down here, so it's 28.18. We'll figure out our target 1 in just a second. So I'm going to get rid of the watch list for now, add the order panel. Oh, I'm going to connect to paper trading. Of course, you would connect this to your own trading account if you want to place it live. Okay, so let's figure out our target 1. So we place our entry and stop loss. We know that's then a risk of $3.98 per share. We're going to take profit for our target 1 at the exact same distance away from our entry as our stop loss. So it's equal, 1 to 1. So in this case, that means that our first target is going to be 31.94. Now with that, so 31.94, we want to make sure that we are risking what we want to risk. For us, that's always going to be $50 for the first half of the trade, $50 for the second half of the trade. Ultimately, it's up to you guys what that is. For us, we do that. For you, it might be a different thing. So 35.92. In fact, that's going to go in now as a market order, actually, isn't it? Because price is already there. We're going to take profit at 28.18. Amount of risk. Here we go. So we are in these trades now. I put them in as a limit order, but of course, price is above that number. So we are currently within that area. We are in this trade, and we will see what happens. We'll come back to it next time to see how that works out. Looks like it didn't place our first target, so let me just put that in again. It's kind of market order, isn't it? Same quantity, stop loss is there, and this was 31.94. So that's in. Seems to have cancelled the other trade. Let me just put this in again. This seems to be being funny with me today. Be me not looking at it properly rather than the other way around. I don't know why that's happening, but every time I put one trade in, it cancels out the other one. I'm not going to spend too much time figuring out why that is. It's likely me pressing the wrong button. And in any case, we're using this as on a demo account to show you where these trades would be placed. So we'll move on from that. I'm going to place a little note. So placed on the 11th. Here's the 11th of February. 1 week, 3 days. Great, so that was trade number 1. Let's go and find another one. We'll come back to the matrix. Oh, we've got a new opportunity here, VSH, Vishay Intertech. Okay, so currently the EMA price is 20.66. So I'm going to cycle through timeframes until or unless we find a red UFO that coincides with that number. Currently nothing on this time frame. Either there, either there. We have something on this time frame. Brilliant. So this is a 1:44 minute. This is great. Every chart that we've looked at so far, which is only 2, we have found a trade straight away, which is nice. So this is a 1 week and a 144. We're going short. The entry is 20.40. The stop loss is 20.83. Now, one thing I've just noticed that might actually stop us taking this trade is, you see this number up here? That number up there tells us basically the probability of the UFOs pushing price to the next UFO. Normally, we would want a minimum of 50%. It's very close, 49.14, very, very close, but rules are rules. Now, some of you might have a rule that says, as long as that's more than 30%, I'm fine. Because actually, this is kind of giving you the probability of the UFOs without taking into account the EMA, without taking into account the autoclimate. So that's kind of the baseline probability. Like I said, if you have stricter rules, you might say, I want that to be 70%, 60%, 90%. I mean, you wouldn't place any trades if that were true. You might have laxer rules that say 20%, 30%, or I don't care, right? For us, we normally use a rule of 50%, so I'm going to stick to that rule and be consistent. So because that is no longer showing us the number that we want it to have, we will not place this trade. So I'm just going to delete that over there, and we will continue to look for new opportunities. Okay, TXT, Textron. So I'm just going to do the exact same thing every time. So we've got our EMA at 72.03. Let's go through and see if we have any UFOs around there. We do not, so no worries. By the way, I know I'm doing this quickly. For those that are new, I know I'm switching through timeframes quickly. I'm doing that so I can find the right probabilities, or find the right opportunities. You can slow down or pause the video if you need to, if that helps. For those that have been joining us a while, it might be too slow where I'm going through things. So for those where it's too quick, essentially all I'm doing is I'm filtering through timeframes on the right hand side to see if we can find those red UFOs that coincide with this number. If I find it, I'll stop and place the trade. If I don't, then we won't even carry on. 45.08 for this one. No UFOs so far around there, so no trades. So the longer you do this and the quicker that you get at it, the more efficient this is, right? So if you're nearly, but not enough. If you're spending a while going through things, like for me, where I might be explaining stuff, right? Explaining how it works, that takes a little bit more time. But you can imagine that once you know what you're doing, you've got a list of 20 odd stocks, 30 odd stocks to look through. You just click through and you just look. Does it line up? Yes or no? If you see something lining up, you place the trade. If you don't, you don't, and you move on to the next opportunity. Okay, so for example, this one, the EMA price is almost exactly where current price is. So I'm looking on the right hand side for a red UFO that is at current price. If I find one, we'll place a trade. If I don't, like now, then we will move on. 17.70, very close on this time frame, but not close enough. Nothing around there. So again, we'll just keep going until we find an opportunity. So this one is 37.43. Again, just keeping an eye out on the right hand side. Do we have any UFOs around that? If not, move on. If so, we might check other things like the probability rating and things like that. But we would move further down our checklist to see what we do in terms of a trade. So this one is 27.74. Close, but not close enough. We need these things lining up because they give us extra probabilities. So, for example, right now, on the 3-day chart, we have an opportunity. What we'll do now if you find you're looking at 4 time frames, 3 time frames, 2 time frames, however many that you compare against, and you have an opportunity on both, which one do you pick? The one that has the highest probability rating. It's an easy way to do that. Or it could be the one that has the tightest risk. It could be the one that, I don't know, if you've got 2 UFOs overlapping on one of them, you might use that one. So you can use objective reasons, is my point, to help you differentiate, so that it's not a make it up as you go along, pick your favorite. You're basing it on something that's objective. So for me, I use this number up here. So whatever the greatest number is. So we've got an opportunity on the 3-day. So just to break this trade down, thick red dot, probability downwards. Our EMA value on the left-hand side is 16.84, which is up here, which in this case is within a sell UFO. What that's doing is giving me sellers, sellers, and sellers at the same time, which increases the likelihood that price goes down because we've got more sellers all at the same price. So we've got an opportunity on the 3-day. Let's look through different time frames to see if we can get that number higher. So it's currently 61.34. So far the 3-day is winning. No opportunities there on the 1-day anyway. And this one doesn't line up. Doesn't line up. So 16.84 is just outside of this UFO. So the only time frame that works is our 3-day. So we will use that trade. Brilliant. We've got decent room to the downside as well. So let's place this trade. So it is the 11th. PRMW, which is Primo Water Operations. 1 week and 3 days, which is the same time frames we used last time. The entry will be current price, so whatever that is, 16.46, it will be similar situation to what we did on our first trade. We're currently within the opportunity, so we can go in at market. It's not very common that we'd go in at market, but if that's what is in front of us, then that's what we'll do. Okay, so PRMW. Said we are currently within this, so we will take it at whatever current price is, which is now, it looks like 16.45. So we'll just draw this 16.45 to 17.67. Brilliant. So our first target will be, so it's at market. Our stop loss is 17.67. Risk is $50. Always comes up with that. First target is 15.22. So we'll put that in. We'll draw that. Double click. 15.22. There we go. That's our first target. Our second target, draw that in, was going to be at 9.35. So quite a way away. More than likely, we would just end up cancelling our trade somewhere between the entry and target if it did go down. So this is at 9.35. So it's quite a long way away. Same risk. There we go. I don't know why this is happening. It's cancelling one trade to get into the other, but no problem. It's an example's sake, right? So you can see what we would have done there. So placed 11th of February, 1 week and 3 days. Okay. And our first target became 15.22. So we'll see what happens with that. Alrighty, next trade. By the way, I'm just checking the chat. It doesn't look like anyone's got any questions, but of course, let me know if you do have questions. I'm always happy to go through things there with you. So let's bring top back up. Let's carry on down our list. See what we've got. Oh, okay. So we've got an opportunity, similar opportunity here. Just doing maths really quickly in my head. So that's about $7-ish, isn't it? Yeah, so it would still work. Okay, so I'm just thinking in my head out loud there as to if this was going to be too big to take us to our final target, but it looks fine. So we have Big red dot, probability down. We've got our EMA, by the looks of it, just above current price. So our EMA is at $40, which is of course within this UFO. These UFOs are very, very close to each other, so we're going to use them together. But bearing in mind, we're looking at the 3-day chart. Let's see if we can find another opportunity on a different time frame that has a greater number here. So at the moment, it's 55.77. No opportunities on the 2-day, no opportunities on the 1-day, and none on the 144 either. So we will use this one, and this is what we'll do. We will combine them, like we said. So this is PPBI, 1 week and 3-day. Just happens to be that we're placing a lot of trades on the 3-day chart today. So 39.03, that's the entry. Stop loss will be 46.58, which is taking this further number on the second UFO and adding 10 cents. Target 2 will be 28.51, which comes from this UFO. We'll figure out our target 1 in a second. Okay, PPBI. How's that PPI? Which, if you're in the UK, the whole thing about PPI, lots of adverts about it all the time. Always think of that when I hear those letters. Okay, so we will be doing the same situation because I believe we're already within it. So actually our entry is going to be current price, which becomes 39.67. Weird, actually, very strange that we will have so many trades that we get in at market. It's very, very rarely would we do that. So let's sort of do this. So the entry is going to be whatever price is now, so 39.67. Stop loss is 46.58. Risk is $50. Now let's just check that our profit target really is far enough away. So this is 28.51, which it is far enough away. So we'll place that trade. 28.51. So that's trade number 1. Trade number 2, same thing, going in at market. Very, very rare that we do that, but it's happened 3 times today in a row. Must just be because there's lots of stocks that are at their EMA prices with UFOs that happen to be around them. So this one is 32.61. We'll place that. Again, it's a cancelled one for the other. I need to look into that as to why that's happening. I'm sure it's something very simple and it's just me that's looking at it in the wrong way. Okay, so 3 trades so far, all of them very similar, getting in at current price, which is basically where the EMA is right now, coinciding with a UFO that's probably already working. So we'll see that and see how that works. Let's look at some new trades, new opportunities. PFS, which is 24.32. Nothing there. Nothing there. Let that load. Brilliant. We have an opportunity here. So the EMA is at 24.32, which is just underneath this UFO. Now, bear in mind the EMA is a moving average, right? Exponential moving average, which means as price goes up, so too does the EMA. So what we need to think about is in advance, if price moves up to this UFO, is the EMA going to move up and still be a part of that UFO? Yes. The EMA is currently 1 cent away from being inside the UFO, and as price moves up, so too will the EMA. EMAs, however, are lagging, which means depending on how price moves, it's unlikely that if price were to move up to here, that the EMA would fall outside of this UFO. It might do, and we cancel it ahead of time if that did happen. But it's likely that as price moves up and the EMA moves slower behind it, that it all coincides within this UFO. We've got just on the dot 50% probability from this trade, so happy days. And we've got decent profit margin to the downside. So we will place our first trade of the day that is actually a limit order, which is what the majority of our trades normally are and most of the time should be. I say should be because what are the chances, and I know it's happened 3 times today, but what are the chances that whenever you happen to be looking at the chart is whenever is the best time to buy or sell something? It happens to all line up at the exact time that you're watching the chart. It's very unlikely. Like I said, it's been very strange that that's happened a lot today. So let's place this PFS. PFS. Okay. So this is 24 point something. That's in here somewhere. This was on the 144, I believe. Let me double check that. Yeah, this was on the 144. So it's also a different market, like a different time frame that we're using again. So 24.50, that's going to be the stop loss. It's very tight. So if I go down to the 144 here, it will look less tight, I'm sure. There we go. Okay. So this is a limit order, entry of 24.33, stop loss of 24.50. First target is going to be 17 cents away. It's down here at 24.16. So it is tight. This trade is unlikely to last very long. Might even be that we get caught out on a gap on this one. So this is where we want to be more aware of earnings and more aware of news that could make price jump over where we want it to be. But that will be the first half of the trade. In that goes. The second half of the trade is at 20.10, which is all the way down here. So unlikely that we'll reach all the way down there. It's the further away our targets are from our entry, the less likely we are to hit them. And that's fine, because if we take profit in between, it's still going to be happy about that. But this is nearly a 25 to 1 away. You're obviously much more likely to hit a 1 to 1 than you are to hit a 25 to 1. So great if we were to hit it, but for the time being, more likely that we would take profit somewhere along the way down before something changed. So 24.16 was our first target there. We've got 10 minutes left, so let's see if we can find a few more trades. PFS we just placed, so OHI. Oh, if we can find one on this one, I'd be particularly happy, and I'll explain to you why in a minute. So nothing there, so we want 29.48 if we can. Brilliant. Great. So I'm happy for many reasons on this trade. Let me explain. We have a thick red dot, probability down. It's also the first dot to the downside, which tends to mean, we can see here, this market would usually go down for 5 candles on a weekly chart, so 5 weeks. And this is the first week to the downside. So based on what usually happens, we've got a bit more room for it to continue down. That's great. We also have, as well as a red UFO here, which decent probability rate, that coincides with the EMA, happy days. We also have a red UFO on the weekly as well. So we've basically got sellers, 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 all around the same price, which adds to the probability. That's not to say that this is definite, nothing ever is, but it gives us more probabilities. So I'm always going to be happier the more probabilities that we have. Similar situation as what we've seen before. We're on a weekly and a 3-day chart. We see that, oh, I don't know what I've just done there on my, there it is. So 1 week and 3 days. We're on a 1 week on the left, 3-day on the right. We are within the UFO, which means we are going to go short at market again, which again, very strange that we would do that. It's not very common that happens. Entry is going to be whatever price is now, which is 29.27. Again, that might be slightly different by the time we get there. Stop loss will be 31.90, which is taking this second number and adding 10 cents. Second target is going to be 7.90, so again, very far away. Unlikely that we take it all the way there, to be honest. Likely to take somewhere in between. Somewhere in between is still going to be good if we're profitable. If we lose, fine. We're okay to lose, considering we place a trade knowing full well that we're placing risk. If it goes in our favor, great. If it goes against us, we've already accepted that that can happen, because otherwise we shouldn't be trading, right? Everything we do when we trade is taking risk, whether that's investing long term, whether that's trading short term, anything in between. Trading, hoping that everything's going to go well or expecting that everything's going to go well, not placing stops because you're going to be right. It's an extremely arrogant way of doing things, and more than likely will result in a very bad result, or a very bad loss at some point. So we always place stops. We risk what we are comfortable to risk, and no more. So in this case, we have an assumed risk of $100 per trade. That's just because it's a nice round number. $50 of risk per one or per side. You don't need to risk $100. It can be 10, it can be 20, it can be 1,000, it can be 2, it can be whatever you want it to be. It's up to you when it comes to your risk. But you want to make sure that you are risking whatever you are comfortable with. No point placing a trade that makes you feel uncomfortable. If you were to lose that, or even I would say, if you could lose 5 trades in a row at that risk and it would impact you emotionally or psychologically, lower your risk per trade. Think about it this way. If you're risking $100 per trade and you could be wrong 5 times in a row, that happens, and you've lost $500 from your account, how do you feel? How does that affect you? If you don't care and that doesn't bother you, fine, do that, maybe increase your risk. If that scares you and it would make you freak out, reduce that. Let's say you're risking $10 per trade and you could lose 5 in a row. What does losing $50 do to you? Do you care? Does it affect you? If it does, lower your risk. If it doesn't, great. So whatever that number is should never come from anybody else telling you what it should be. It should come from your comfort levels, your risk tolerance. Bearing in mind that we can be wrong a few times in a row. It happens. Unexpected things happen in the markets, push price against us. And if that's the case, we need to be okay with taking that loss. Okay, so we have now placed 5 trades. We've got 4 minutes left. Let's see if we can find another one. Be nice to get another one in before we go. So this is NAVI. 19.38 is where we want to see the UFO. Close, but no Siggy, as they say. No UFOs on that one. Not where we want them to be. Okay, 24.45 is this one. So let's see. Nothing on that one. Might end maybe not on a high note and just end on saying, well, we can't find any more trades, but we'll do what we can. See if we can get anything before we finish off today. And of course, hopefully what these sessions do is they give you direction for you to go and figure out for yourself and have a look through markets for yourself without the guidance, to look through and see, are there opportunities that I want to be taking, assuming that you follow the same type of methodology. And as far as that goes, I say this all the time, there are so many, we might have an opportunity here, let me check on different ones. So many different ways to trade, so many different ways that you can approach the markets, probably equally as valid as each other depending on how you do them and the variables involved. So if this makes sense to you, great, use it. If it doesn't, it's fine. There's going to be other places I'm sure that will make sense to you. The most important thing when you trade is that you trade in a way that does make sense to you, and that you've back tested, you've tested, you've demo traded before you go placing live trades. Okay, so our last opportunity of the day. This looks like it's working out reasonably well. Thick red dot, probability down. We've got a red UFO. We're within it. We're going to do the same thing. We're going to go up at market. the UFO that coincides with the EMA price. Happy days, let's go and place this trade. So 11th, this is MITK, 1 week and 2 days we're on, 2-day chart. We're going short at market, which is 1588, stop loss 1711, target 2 1232, and we'll figure out our target 1 in a sec. MITK, away Microsoft Edge. It's always recommending things to me. Leave me alone. Okay, cool. So we want 1588, which is, or 87 now is where price is. Great. And 1711, where we're at. So at market, stop loss 1711, $50 risk, or again, whatever it is that you want to risk, whatever you're comfortable with. Our profit target will be 1232. That one's gone in. 1232. And then our first target is going to be, so same at market, same stop loss, and our profit target will be 126, 14.59. Okay, and then let's place a little thing. So this was placed on the 11th of February, 1 week, 3 days. No, 1 week, 2 days. Okay, I'm not sure I've done that for all of them, so I'm going to go back through after this session and make sure I place the little notes to remind myself what we've done, where we've done it. We have now placed 6 trades on top of the few that we had open that are in profit for us. We've got these new opportunities that we've placed. I know we went through so much. For those of you that are new, you might be looking at this going, how does that work? What is that? What is she doing? For those of you that have joined us before, you might have gone, okay, stop explaining that. I get it. Hopefully somewhere in between is where you guys have taken the value. If you have any questions, you can email me, which is becky@tradedictive.com, or you can go to tradewithufos.com/Becky. You can get different apps and platforms here. You can book one-on-one coaching if you'd like. You can scroll down and you can post questions here, which is great. If you post questions there, then we can see them, we can answer them there, and other people see them and other people learn from it. So I will see you guys soon. I'm not sure when the next stock session is, but I think it's in a couple of weeks, and we will go through some new opportunities then, see what happened with these trades. Any questions, reach out. Otherwise, have a great end to your trading week. Have a great end, or have a great weekend, and I will see you Monday morning bright and early for the market commentary that we do. Take care. Bye-bye.